Is the bottom finally in with PayPal stock? We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. Time to talk about PayPal Holdings, ticker symbol PYPL. Over the last year, you've been decimated, down 66%. Year to date, doesn't look any better. You're down 54%, but the company just released their Q2 earnings. We also essentially got full year guidance for the rest of the year over at PayPal, and the stock is popping in the after hours. I'm seeing this stock up over 11%. And those of you that are technical analysis deniers out there and you say this is a bunch of voodoo, well, I tell you what, this stock is traded just in perfect technical patterns, and I will show you where this stock is and how easily it is to predict the next move with PayPal. And we'll talk about, is this area where the stock bottomed out last month at about $70 per share? Is that the bottom on this stock? And can you buy it even now today, closer to $100 per share? Now, talk about Q2 earnings. Those came in at $6.8 billion. You're up about 9% year over year. You did beat expectations, which I'm sure were brought back in a little bit by about $20 million. You also beat on that earnings side. The earnings side of the company, a little complicated. We'll stop at operating income and we'll show you, is there any improvement over at PayPal from a financial perspective? Now, I think more importantly than the Q2 numbers, which we'll go through here in a moment, more importantly than that, we got Q3 guidance as well. Net revenue is expected to be about $6.8 billion. That would essentially land you flat quarter over quarter, but it would also bring you underneath the expectations I'm seeing over at Wall Street at about $7 billion. Now, some analysts had this as low as about $6.7 billion, some as high as $7.29 billion. I'll remind you that PayPal saying their upcoming Q3 expected to come in at $6.8 billion, essentially flat year over year and underneath the revenue growth rate that Wall Street had. However, PayPal did follow that up with giving us full year guidance, essentially giving us Q3 and Q4 guidance, and revenue is expected to come in at $27.85 billion. You might be wondering where that comes in with expectations. For the full year, analysts were expecting $28.18 billion worth of revenue over at PayPal, or roughly 11% growth, coming in towards the low end of those estimates. However, when your stock is down over 50% year to date and down over 66% over the last year, some of this, or you could even say maybe most of this, already priced into the stock, and some investors, quite frankly, maybe just relieved that PayPal is within range of expectations. Now, for the full year in 2023, it doesn't necessarily get any easier for PayPal. They're going to have to somehow accelerate from a low teens to nearly high single digit grower on that revenue side, and they need to accelerate to 16%. At least that's where Wall Street expectations are today. And quite frankly, into the future, you're a low to mid-teens grower over at PayPal. You have to ask yourself as an investor, as we move through these financials, are you willing to pay a forward price to earnings on this one close to 2023? You're also looking at a forward price to sales on this one at about 3x. You have to ask yourself, are you comfortable paying 3x sales, 23 times earning for a company projected to grow low to mid-teens for the foreseeable future? I wouldn't necessarily call that a value stock, but certainly much more reasonable valuation for PayPal than we've certainly seen in years past. Now, the net revenues came in at that $6.8 billion. Our transaction expenses coming in about $3 billion. You don't have a lot of leverage on these transaction expenses over at PayPal. They'll just continue to go up with the net revenues. Where you have some leverage with this company is they are showing you they are able to at least keep cost in check and in some cases drive them down. We notice our sales and marketing expense went from $628 down to $595. That is very nice discipline as well. Technology and development, you'd still like to see them continue to develop here, but relatively in line from $746 million up to about $815, and where they did some really nice job controlling costs. In fact, they drove them down. General administrative went from $522 down to $514. Now, unfortunately for PayPal, an industry headwind for a stock like PayPal is a deteriorating economy where people take on loans and they all of a sudden can't pay them back. And you see over the last year, we set aside just $100 $169 million for transaction and credit losses over at PayPal on a quarterly basis. That has really accelerated all the way up to $448 million. You see, for the last 6 months, it paints a similar story, from 442 nearly doubling to 816. And again, $448 million is actually quite a bit of money. In fact, it's almost as high as any other expense that we have on the balance sheet minus R&D. So our total operating expenses, while PayPal did a nice job controlling the things that they can control, we saw acceleration in those credit losses, and that's why total operating expenses went from $5.1 million all the way up to about $6 million. So you take this 6.8 and you minus off 6, and you get operating income in the most recent Q2 quarter for PayPal coming in at $764 million. Last year, on a quarterly basis, we were actually at $1.1 billion worth of operating income. It appears over the last 6 months, the $700 million-ish operating income is about the run rate PayPal is operating under, as the operating income coming in at about $1.5 billion for the first 2 quarters for PayPal this year. Now, if you flow all the way down to a net income number, it paints a pretty ugly story. They had some other income or some losses on some investments that they made, so it really skewed your net income. In fact, it went negative from a GAAP perspective. I personally would analyze this company from an operating income perspective, and why things are getting better from a revenue perspective. Things are certainly getting better from a cost control perspective over at PayPal. We are concerned a little bit about the credit losses, certainly not much that PayPal can do about that. But probably more importantly, I'm questioning or just wondering out loud, is this capable of really doing mid-teens growth for the next 2 years over at PayPal? If the economy deteriorates, how is PayPal actually going to become a mid-teens grower? I think that's a question a lot of investors are going to be asking in the coming days. Now, in terms of cash flows over at PayPal, pulled down a disastrous net income number of $341 million, but we do get to add back in those transaction and credit losses of $448, depreciation and amortization coming in at $333, stock-based compensation coming in at $312. I will give credit where credit is due. I always slam the companies for having too much stock-based compensation. It did go down year over year on a quarterly basis, and we're also seeing it on a 6-month basis as well. You went from $390 down to $312. I tell you what, when your stock is down 60%, even when you're giving out $312 million, it is more and more shares being given away. So even though you see a lower number here, it is still probably even more significant dilution. And I'll have to ask you, as shareholders potentially of PayPal, is a company doing $341 million worth of net income, are the executives really worth $312 million? Or could we find somebody that would make far less or operate this business? I'll let you answer that question. Now, we had those net gains, and in this case, losses on our strategic investments. So not only did the executives give themselves $312 million on a $341 million loss, but they also took a $672 million loss on some investments that they made, when that money could have went into marketing, could have went into employees, could have went into customer service, which is certainly always lacking over at PayPal. Now you get to add all that stuff back in, all the management goofs, and certainly these credit losses as well. So we get our net cash provided by operating activities, paints a pretty good story, from 1.3 up to nearly $1.5 billion in the quarter over the last year on a 6-month basis. Shows you how good this quarter was, coming in at $2.7 billion for the last 6 months, more than half of that coming in the most recent quarter. Again, a lot of that has to do with the fact they took losses on investments, and stock-based compensation still rather elevated based on the results you're getting over at PayPal. Now you flow through the entire report, and you did blow through about $1.1 billion worth of cash over at PayPal, and you do see evidence of it a little bit here on the balance sheet, which taken in totality still looks pretty good over at PayPal. You did take on a little bit more long-term debt since the beginning of the year, from $8 billion up to about $10.2 billion on that debt side. Still have in excess of $9 billion over at PayPal. Now, I know there's some negatives to this report. Okay, it's not much to get excited about, and it could be that these results are just good enough. I don't know who would be shorting the stock down at these levels after this one has just completely exhausted itself from a technical perspective. There's certainly just a lot, and we're talking about a lot of bad news already priced in to PayPal stock. Now, the first thing I want to show you is we've been calling this from a technical perspective from essentially a day one. There were some areas of support up here that once this thing just continued to slice through, well, it was clear the strong area of consolidation between about $70 and about $80 per share was just a magnet. We represented it with this green box, and somehow these things do work out almost to the penny. This thing bottomed out right on this green box. I did not adjust this from our last earnings videos. In fact, these levels have been set in for several quarters over at PayPal. Now, we've made a nice strong jump. So some of you that might have been wanting to get into this stock might be a little bit bummed out because look, it's gone from about $70 per share up to about $99 per share. Do not have FOMO. FOMO is not an investing strategy. There is nobody in the top 4 or 5 investors in the world in terms of their net worth that trade and buy stocks based on FOMO. The past is the past. Now what you have control over is the future over at PayPal. It has met a hard level of resistance that used to be a hard level of support up here at about $100 per share. We'd highly anticipate this stock meeting resistance up there at about $100 per share and finding some kind of a red candle, not necessarily in the near term, but here very shortly. I could see this stock consolidating here at about the 100, maybe as high as $105 per share, as certainly the sellers have exhausted themselves with PayPal and the buyers might view this as a time to step in and buy. But I think you get rejected at this level because quite frankly, the valuation and the forward estimates over at PayPal still make this, I wouldn't say necessarily a risky stock, but it's certainly not a quote value stock or a stock without its risk. I think it's a high probability you get rejected in this range and come back at the very least and retest towards the top of this range in the $80 to call it $85 range. You get a pullback like this. I wouldn't blame anybody that wants to buy into PayPal stock. This be a level that you can buy. Certainly from a very bearish camp, if you get a total market reversal, there's a lot of negative things coming from inflation and maybe some geopolitical things. Well, certainly you could come back here and retest 70, but there's clearly some kind of put option underneath this stock at about $70 per share. I'd probably step in there and buy, although your whole portfolio would probably be on sale in that case. Now, the very bull case, some of you might be really hoping this one continues to go up. You do need to break up over this area of resistance. And just like on the way down, when you broke through these critical areas, it was a violent move with PayPal. The same could be true on the way up as well. You could get a violent move upward, certainly if this company is deciding to do acquisitions and grow that way. Certainly if there's less bearish news on the economy and these credit losses and other exposure that PayPal has to the economy, that starts to subside. That could be bullish for earnings as well. This one could get up above, I would say probably north of 110. You could have a pretty clear path back up into the 120s where you'd also meet some resistance there. I think the path of least resistance with PayPal in the shorter term is actually probably lower. And if you are a dip buyer, that's personally where I would step in. But the valuation on PayPal, the growth rate, just quite not attractive enough. Again, despite being down over 66% over the last year. And on top of that, you got a lot of companies that pay dividends and have a much, much larger business and addressable market than PayPal, also on sale, trading for similar valuations. I'd probably rather focus my long-term portfolio there, but certainly from a trading perspective and a short-term perspective, a lot of opportunities in this name. Hopefully, guys enjoyed today's video. We'll be back again soon with more. Good luck with your investments.